Thousands of workers and trade union members gathered in Kartal, Istanbul to protest against the Turkish economic crisis and ask for higher minimum salaries, full of concerns over President Tayyip Erdogan's risky new economic policy and forecasts of another interest rate cut on Thursday. The Turkish lira crashed as much as 7% in just a few minutes to a new record near 15 to the dollars on Monday. The central bank previously kept the lira below the 14 level, intervening in the foreign exchange market 3 times in the last 2 weeks by selling dollars. This led to an organization of rally by the Confederation of Revolutionary Workers Trade Unions of Turkey, in which demonstrators marched through streets holding banners and signs, with several speakers addressing the crowd from a stage and demanding the minimum wage to be raised to 5,200 liras per month. The sudden slide left the currency with half the value that it had at the end of the last year, powering inflation in a big emerging market economy which depends heavily on imports. Commerce Bank said in a note,
"Last week's apparent relative stability of Turkish lira was artificial and unsustainable. Now we see the build-up pressure unfolding, driving lira weakness to the next level. Any further attempts of central bank to stabilize Turkish lira by interventions is probably bound to fail."
The lira slid as far as 14.99 against the US dollars currency in thin market liquidity from Friday's close of 13.889 by 8:15 GM time. It had trimmed losses in volatile trading and stood at 14.44. Turkey's central bank, under pressure from Erdogan, is expected to cut its policy rate by 100 basis points to 14% this week, despite inflation soaring to 21.3% last month. Erdogan has repeatedly advocated further rate cuts as he promotes a new economic plan prioritizing economic growth, credit, production and export, despite widespread criticism of the policy from economists and opposition politicians.